So will performance this month send retail investors back to the sidelines? Let's ask two of them. Wayne Smalls is an engineer at the Health and Human Services Department, and Thomas Vitkowski, Director of Finance at Cambridge University Press. It is great to see you both. Wayne, first to you here. You see the market selling off this month. What are you doing?
I'm remaining patient, calm. This isn't unexpected, considering the amazing performance of 2013 and the market essentially going parabola in December. So this isn't unexpected. Just nice to see.
Are you suffering some losses here? And at what point do you get worried?
I've got some losses, but it's nowhere close to the price that I came in with these buys at.
Okay,
so it's going to be a while.
Okay, what about you, Thomas?
January was a little tough, but I haven't done that much. I've bought a little bit. I still have about 15-20% cash. I think if it drops a little bit more, I might be selective and pick up, if a GE hits in the 23s, or if Apple drops a little bit, pick up more stock.
And guys, I want to bring our panel into this discussion as well as we kind of kick this around. So, Thomas, what's interesting is that you've kind of got a shopping list, right? There are a couple of names that you're waiting for that, these levels to hit. In fact, the sell-off here isn't the worst thing in the world because it means that you could actually add to those positions, correct?
Yeah, exactly. And if you look at it, the S&P a year ago today was at, 1,500. So we're still up, almost 20% from that point. So I want to be patient. I've been picking at certain stocks at the start of the year, but I'm going to be patient and wait.
Michael,
yes.
When you hear him say 15 to 20% in cash, does that sound reasonable to you? Missed opportunity?
No, I think that's very reasonable. And I looked at his list. I think it's a fantastic list. Pick your spots. You're right. You're going to be right in the sweet spot of any recovery, and you're not speculating too much because those stocks are tried and true. They have great balance sheets. They have good earnings potential. They probably have some pretty good earnings growth at some point in the not too distant future. And I think most of them pay dividends. So it's a well-balanced, well-diversified portfolio. If you pick your spots, you're going to be extremely well rewarded.
Wayne, I want to ask you, when you look back to 2009 and what we went through there, a lot of investors tell me those tracer memories are still sort of guiding their behavior right now. And I wonder how different today would be if we hadn't been through that. Do the memories of 2009 shape the way you're seeing this fall in January or how you'll go into this year?
Not at all. We have recovered remarkably, and I don't have any reason to feel any fear going forward this year of anything close to 2009.
Well, Wayne, you're a lot better than me because I still have the memories of 2009 and they haunt me. And
I still have nightmares.
Oh my God! If it happens again, I'm hoping that I'm going to be smart enough and quick enough and to get in because that's an opportunity.
I'm curious if either of you own bonds or if it's just equities.
Actually, it's funny you say that. In July, I actually pretty much sold out of all of my bonds in my 403B. And that ended up being a great call. I mean, to make 2.65% on a 10-year, it's just not worth it to me. So I use some high yield ETFs.
And those have performed relatively well this month.
Right. And those yield, closer to 6 or 7%. PFF is one, SPFF is another one. So if I see weakness there, I'll pick up some of those, but individual bonds I pretty much stay away from.
Yeah. A lot of people on Wall Street didn't even make a call as good as that one, so
exactly.
Well done on that. Wayne, I want to ask you, it says that you've actually been a shareholder in Sirius XM for the last few years, which itself is a very fortuitous trade, and that has seen an unimaginable rise as some of this takeover speculation and spin-off speculation keeps swirling. Do you participate in those phone calls? Do you vote your shares into things like this? Are you in touch with the company? How active a shareholder are you in a situation that's live like something like that?
Well, I do my research every night on various websites just to see exactly what's in the mind of hedge fund traders and hedge fund managers, so that I can just be aware of what could possibly happen. So I'm comfortable with it right now, and it's going to be interesting to see what happens with Liberty Media.
Yeah.
Hey, Wayne.
Yes.
Hey, Wayne. If you figure out what's in their minds, would you mind giving me a call? Because I'd like to know as well.
I see some synergies here. And Wayne, last question. I suggested in the last segment that if 10 to 20% downside move wouldn't be a disaster. I don't want to be glib. I mean, to you, what is the pain threshold for a decline in equities broadly here?
Well, the pain threshold would be decline, say roughly 30%. really, I've taken a lot of, I've done a lot of margin trading over the last couple of years, so I have a different type of pain threshold than a lot of my friends do, and quite frankly, some think I'm crazy for that. So I can take a lot of pain.
All right, Thomas, real quick, you?
I'm sorry, what was the question again?
How much of a decline is the pain trade for you here? Is 10 to 20% manageable?
Yeah, I mean, I'm not using margin anymore. I got caught in that trap a few years ago, so I do not touch margin anymore. To me, if things drop, I'll pick up the banks because eventually, if the economy gets better, the banks are going to go higher.
All right, guys, it's been a real interesting lens into the decisions people are making every day. Thank you so much for joining us, and have a great weekend.
Thank you. You
Thank
too.
you.